Hello everyone, welcome to HSC Strategies. We appreciate every single one of you for tuning in to our videos. So today we're going to be talking more about what you see on your charts right now. I know it must be a whole lot of confusion to a lot of you that are new in trading. So we're going to help you have an understanding of everything that you see on your screen. So first thing you have to understand is everything here going up, down, everything, all these things you see on your screen, they are called candlesticks. That's what they're called. So I'm going to zoom in. Every single one of them, both the gray one and the black one, they are both candlesticks. Now, if you look here, you're going to see this tiny line here, and you can see here this one here is really very small, and then you can see it here and here, and you can see a lot of the candles have those wicks. Some have it at the bottom, at the top, some have it just at the top and none at the bottom, some have it here. So these are called wicks. That's what it's called, wicks. So I'm gonna write it on the chart. That's what they're called. These are called wicks. So wherever you see this, just know that's a wick. Wherever you see these ones, they are called candlesticks. So now understanding the price movements, what the price is gonna do, what the price has done, is basically you understanding the candlesticks, the wicks. What is the market doing? Where is it reaching to? So we're gonna be explaining this very much in detail, but trying as much as possible not to give you too much information in the beginning so you don't get overwhelmed and now start getting a bit confused. So far, everything you're looking at here is the charts. You're looking at candlesticks and you're looking at wicks, and we're going to show you and teach you how to read price. So basically, one of the reasons why we're doing this is because we want to help you to pass through some of the loopholes, some of the things that we were doing wrong when we got into trading. When I got into trading, got into learning how to trade, I was basically learning how to trade for a week and I'm already on the live market with live funds. And that was from the direction of the people who were mentoring me and directing me into the marketplace. They were not giving me the right information, the right guidance. And that right guidance is what we're giving you at HSC Strategies. We're holding your hand, pinpointing things that you should be focusing on if you want to be invested into learning these skill sets, learning how to invest on yourself by yourself, invest independently, trade independently, and us still being by your side to coach you and help you to master the market dynamics. So when I got into trading, I learned a lot of things like drawing trend lines, which a lot of people still do that and they still make money out of it. But in my journey, I was taught how to draw trend lines like this, and as you can see, this is a trend line and the market came here, and then I would wait for the market to come here the second time, and then here came the third time, and then when it's coming here again, I'll be expecting to sell without understanding what is called the draw on liquidity, which is this high is the draw on liquidity, the buy side liquidity, where the market is heading to take out anyone who has been selling this with a trend line concept and still go to the downside. So back then, I'll be waiting here for a sell and the market will take me out and still sell. And then I'm wondering, why do they keep taking me out and still going towards my direction? Until I figured out that the problem was that this is liquidity. This is buy side liquidity. The moment the market has come here and again and again and again, it piles up a lot of liquidity. A lot of traders will be going short from here. And then what does the market do? It raids all their stop losses, which I talked about in the previous session, where we talked about using risk management strategies and using a stop loss, which allows you to just stop you from losing more money. That's what it does. It just gives you the opportunity to manage your risk, which is very essential. So if you stay tuned in our sessions, you're going to understand how you can anticipate this happening and how you can get into short position. When I say short position, I mean selling position. So short means selling position, long means buy position. So we're going to teach you, help you, you will demonstrate it until you've mastered it. We'll guide you. And then once you master it, you can trade independently. And you will not need anyone to hold your hand in trading or investing in the financial market. So another one that I was taught was the support, which is classified to be like this. So back then, when I see the market come to a particular point and then come to that zone, fail to reach, and then come again, now I'll be anticipating. Previously, I would have been anticipating to buy from here, and as you can see how the market came here and it took me out, and it would have taken me out if I was buying from here. So basically, I'm trying to show you the things for some of you who are beginners and some of you who are already trading in the market, have already had this experience severally. That is why I decided to start with that, so you can have a better understanding, that we understand your frustrations in the market, because we've been there, we've had similar experiences, and we're going to guide you and help you to be a better trader in the market. And we can show you how you can anticipate to sell from here. So even looking at this, I can see that if I wanted to, you can see this gap right here. I'm going to mark it. So this right here is a fair value gap. This right here is a fair value gap. So, and if I was looking for buys here, I would have been looking to buy from this fair value gap right here. If the market had come down here, I would have been looking to see like a 5 minutes shift to market structure, which will also be taught in well details. So the 5 minutes, once I see that 5 minutes shift in market structure, I would anticipate to go long. But in this situation, you can see the market went short and it took out where I would have went long. Now it becomes an inverted fair value gap. Now I'll be looking for shorts in that same position, and you can see how the market rallied back into the inverted fair value gap and then it dropped. So if I was looking for sells here and the market comes in here, I'll go to my 5 minutes time frame and I'll look for a 5 minute shift in market structure. So another thing I'm going to show you is time frames. So do not get overwhelmed with the information I just displayed on the screen. It will be explained in more details. It was basically me trying to explain to you some concepts, and then I just went a little bit advanced, but just stay with me on this one. So we'll show you how to go through your time frame. So here is the monthly time frame, and here is the weekly time frame, and here is the daily time frame. So in the monthly time frame, every single candlestick is 1 month's price movement. So every single one of these candlesticks is 1 month price movement. And if you look down here, you can see 2007, 2009, 11, 13, 15, 17, 19, 21, 23. This candle is for September. The next one is for October. Next one, November, December, January, February, March, April. And that is because I'm on the monthly time frame. And now if I go to the weekly time frame, every candle here is a weekly candle. As you can see, this one, this candle, 26 September. So the next candle is going to be 1 week. And we go 3rd October, the next one, 1 week. 10th October, the next one is going to be 1 week, so probably 17. The next one, 1 week, probably 24. The next one, 1 week. So every single candlestick in the 1 week chart is 1 week price movement. Daily, the same thing, every single candle. And we go down to 4-hour time frames. Every single candle is 4-hour time frame movement. So within the past 4 hours, this is what the market has done. This is what the market has done. This is what the market has done past 4 hours. This is what the market has done past 4 hours. So the same goes to every single time frame until you go to the smaller time frame, 5 minutes time frame. This time frame you can see right here at the bottom here, this candle was 650. So another thing to take note of, my time right here is New York time. So it will be best if you click on this, you look for New York, and you tap on it and set your time to New York time, because I'm trading with the New York time. So in this time frame, every single candlestick is 5 minutes time frame of price movement. Same goes to 1 minute. You can see right here, this one 7:03, 7:02, 7:01, 7 o'clock, 6:49, 6:48, and it goes down to even the second time frame. As a beginner, I wouldn't advise you to be on the second time frame. It's best to just be between our time frame and use the 5 to 15 minutes time frame for entry positions, which we will also cover in the next sessions. So guys and girls, we'll be closing this session here, and in our next session we'll also explain a whole lot of amazing things for you. And we appreciate you. You can like this video, you can comment, you can ask questions, you can leave your questions at the comment section, and you can also subscribe to our channels and follow all our pages, our Instagram, our YouTube channel, our Twitter, our account and Thread, our YouTube channel. Please do like and follow, and we'll be giving you more educational contents. So have an amazing day, guys.